Welcome back, folks. Quick look at gold for the week ahead. I think it's pretty straightforward. Okay, let's talk about a couple of things. Firstly, we have this is the 4-hourly chart. So we've got buy side liquidity. We also have sell side liquidity. Okay, so we have equal highs above and we have equal lows below. Somebody asked the question: are we going to head back down to the original drawn liquidity that I mentioned, which is 2470? And I think yes, because if we go back to our weekly chart, we still have equal lows below. Okay, so this liquidity is still available. Okay, there's still plenty of stops below that. We also have this fair value gap, and we also have this weekly bullish order block. So yes, I do believe we will get back down there. Okay, this move last week didn't quite reach the premium end of that fair value gap, and I think we will. Okay, but what we want to avoid is trading inside the range. So let me go back to the 4-hourly chart. Now, as I said, we have equal highs and equal lows. Okay, very clean liquidity above. Okay, very clean. So we have very clean liquidity above and we have very clean liquidity below. So when I have that, I try to avoid trading inside the range. What that means is I wait for a breakout from one side or the other. Okay, so I'm looking for a breakout and a rejection, right? So for example, we're here. If we get a breakout above those equal highs, then I'm going to be looking for a rejection, right? So for example, we move up, maybe Monday, Tuesday, Wednesday, we're the high of the week. I want to see an immediate rejection, pushing back into the high of the week, wherever that is, right? Maybe we break out, we get up to that level there, we get back inside the range, we push back up, and then I will be looking for shorts, just like we did last Wednesday. Okay, so if I go back into a 15-minute chart, I've shown you the setup. Okay, you're got to go back and watch the videos. So last week we took out Tuesday's low, which was the low of the week on Wednesday. Okay, and we basically rejected. I've shown you exactly what that setup looks like. Go back, watch the videos. We break out, pull back inside the range, and then we went higher. So I want to see a breakout. I don't want to be trading inside of this range. Okay, the way that I would be looking at this, if one side breaks, then I'm going to be looking for a rejection. That doesn't mean that I immediately enter the market, right? So for example, I don't want to be trading inside of this range. Okay, I want to wait for a breakout of one side, and that could be down here. Maybe we go down here first. Okay, we break out, then we reject, then I would expect this side to be taken, right? Because of all of this buy side liquidity. Okay, however, if we break out to this side first, then I'm going to be looking for a rejection, push back in, then a continuation for the algorithm to attack sell side. Okay, so that's kind of how I'm going to be playing the market. Now, directional bias, from my view and the way that I trade, is just a guidance. Okay, you would have seen in my last week's trading, I didn't just trade in one direction. Okay, even though I had a bias to the downside, right? All this move down, expecting us to take out this low. Even in that move down, I traded in both directions, and that's basically how I trade. I trade my setups. Okay, that's why you have to learn what your setups are. What do you need to see to expect repricing lower? Okay, and what do you need to see to expect repricing higher? Okay, so I'm looking for a breakout, rejection for continuation. Okay, I want to see that occur sometime in London or New York. Okay, so if we look at last week's session where we took out the weekly lows right here in front of your screen on a 4-hourly chart, we took out, this was Tuesday, which was low of the week at that time. Wednesday, this was Wednesday, New York. Okay, we had a break. We basically took the low of the week and we rejected from that level and we immediately repriced higher. Okay, so that's all I'm looking for. I think it's quite straightforward. It should be a pretty easy week in my view. And all I'm looking for is a break and reversal at a key time in a key session. Okay, on a particular day. I want to see that will happen maybe Tuesday or Wednesday. Okay, so a break, rejection, continuation. Okay, on either side. So maybe it'll be a break, rejection, and continuation from the bottom. Okay, what I want to avoid is trading inside the range. Okay, so short video, hope it makes sense. I will now talk with you in a future video.